Hi, everyone. Thanks for joining us. We have a great panel assembled for you guys today. And the topic is an interesting one, decentralization. So we all know what happened with Facebook and Cambridge Analytica and the kind of ill-begotten gains of our user data. But, Recode, the technology website, ran a survey. And they asked people, how much would you be willing to pay for Facebook? 77% of the people came back and said, nothing. We don't want to pay Facebook for an ad-free version. We want the targeted ads, and we want Facebook for free. So I want to pose an open question to the panel. Given that data point, what is the point of decentralization? It seems like people don't really see a point in it. I don't know, Jalak, you want to start?
Well, I think it's because people just haven't been fully aware of the alternatives or the way our data is really being used. I mean, I think, if we're the target of identity theft and breach, and it really impacts our lives, and that's actually happening more and more when it's impacting our elections, when our data is being manipulated. All of this is now coming to the forefront. And I would also say, if we look at, it's also generational. I think if you look at Generation Z, they are not going to have a tolerance for the misuse of data, and they're also going to see the alternatives. We've, at the fund, invested in several companies that are building decentralized identity platforms, and once that kind of becomes the norm, we'll wonder why we gave all our data away for free and allowed ourselves to be exposed in such ways.
Toby, you want to jump in?
I'm sure there's many founders in the room that are thinking about building businesses on top of other platforms. We've got a long history of platform businesses where third-party developers built on top of that. And as those platforms grew in their early phases, it created lots of value for everybody. You had these multi-sided network effects. But at a certain point, these platforms start to sort of mature, and then the platforms themselves begin to compete with complementary services to their own developers. And you have like what Microsoft did to Netscape, Google, and Yelp, and there's many examples of how that's happened. And so I think with a decentralized approach, the governance is built into the network. The platform developer can't just change the rules from one day to the next. Facebook's done it many times with some of their own developers. And so it aligns all the stakeholders extremely well for a very long-term business partnership together. And if I'm a developer and I'm thinking about which platform should I build on, I certainly would want to build on a decentralized one.
So it takes away the risk that, the rug could be pulled out from under you.
Absolutely.
After you build something. Eric?
Well, one of the foundations of decentralization is censorship resistance. And I think it's important not to forget that it was what was Bitcoin built on top of. And when we're speaking about platform to do decentralization, it's about having unstoppable applications. That was the original idea. So censorship resistance is really bringing a new change of paradigm. And if you look at what everyone is trying to build, most of this, an important aspect is that we have a lot of futuristic aspect of decentralized the identity to give back the power to the citizen, etc. But as of today, as we see the applications which are really used, it's all about censorship resistance. And I think it's a very strong point of decentralization.
Yeah, thanks, Joon, for asking this question. I hope there's not fatigue on this topic yet, because we really are just at the beginning of exploring all the incredible opportunities. And really, centralization has brought forward some significant problems that we need to address. When business practices are conducted behind opaque environments, when people don't have the ability to earn income from things that they're trading that are being manipulated against them, the election issues, the use of our data without our permission, these things are very much at the forefront of concerns that are attacking the institutions that we hold dear that allow us to run our system. And so I think there's a propensity for corruption in centralized systems. We absolutely see systemic risk, and these are things that we have to address. And so the timing is very, very apt right now because of the platform concerns and the monopolies that have controlled these systems.
I want to ask so we have two founders and two investors on stage. So open question to both sides. How do you guys basically, how do you guys make money off decentralized systems? Because it seems as though, you make money by centralizing something. You own some central point of control, and that's why there's a lot of value there. So I'll ask the investors first, between Toby and Jalak, if either of you want to take a crack at it.
I think it's a great discussion point, because if you look at most of the applications that have been built to date on top of whether it's the Bitcoin protocol or some of the emerging newer platforms, much more value is actually being created in the protocol itself. You would have been better just buying the underlying protocol, whether it's Bitcoin or Ether, than investing in the leading players in the space, whether it's blockchain or Coinbase.
The fat protocol idea.
Well, I think there's a question on the protocol itself as to, because it's where the value is getting created, can you see that value over time being something that is defensible as well? So while the token aligns all stakeholders and everyone could participate in the value creation, I think at the same time it's all open source. So from one day to the next, you could fork the protocol and you could try to move everyone on the network over to the new protocol with some new enhancements. And so as an investor, you have to think about, well, what are the switching costs for that? Is there stickiness in terms of behavior of customers? They're used to the old protocol. I think that's one aspect. Another aspect, which is very important, is what's the quality of the technical team that's supporting. So I think Vitalik and the Ethereum team is phenomenal. The question is, if someone tries to fork Ethereum, and would you trust the new team to build out on the roadmap in the same way? So it's not clear yet. I mean, there's no one general answer to that. I think you have to look very specifically at the protocol, at the use case, the behavior of the participants in the network, as well as the quality of the technical team.
Yeah, I wouldn't say I'm a proponent of the FAT protocol thesis. I think we've seen value creation, certainly over the last years, at the protocol layer. I do think we're going to continue to see that. And what's exciting, and it goes back to Jeremy's talk on tokenization, is that you can have more participants at that layer. But I do believe that there's going to be value created in the middleware as well as the application layer, just as what we've seen before. And there will be applications created. Now, that doesn't mean that the business models are necessarily going to be the same, where, these ad-supported models, these data-centric models. But I think people will innovate and will figure out, how do you actually create a service that adds enough value where there is revenue generation. And what I think will be different is more people will share in that value creation. But I think the value creation is going to be exponentially more, so the pie is going to be bigger. So that's how I see it playing out. And I think it's way too early to say all of the value is going to accrue, at the protocol.
Well, the biggest business model of decentralization right now is speculation. Because I'm not saying it's a bad thing, but it's very early. So a lot of the money is done by buying tokens and ICO with the objective to sell it to a higher point. And for that to work, you need infrastructure. And then you have a few business models which are really working, like security, like hardware wallet, for instance, and it's still decentralized because we sell safes that people can really use. There is the mining, there is all the exchanges, all the wallets. So the business model which are working at this infrastructure, and I think it's going to take a while before we see the real business model of the use cases of all the platforms that are being built now.
Yeah, so I actually think investors have a super interesting investment thesis here that they may not have exactly nailed yet, which is that they can invest in tokens as well as the businesses that help build the ecology to make those tokens and those FAT protocols more successful. Ultimately, businesses have to come forward to create services that are very valuable to their communities. And building businesses is incredibly difficult. I'm sure as the entrepreneurs in this room know, it's just a crucible. And just because you do an ICO tomorrow and you raise a ton of money does not mean you will inevitably have some sort of incredible business. In fact, it may misalign your incentives to grind through the challenges in the early days. That being said, we have to build reliable services on infrastructure that's global, that can be accessible by all people instantly anywhere in the world. A lot of that costs money. Talent to do those things costs a lot of money too. And recruiting those people need to work into businesses that have strong foundations for equity sharing and other things makes a ton of sense to me too. So in short, I think it's an interesting investable opportunity because you can invest in the tokens as well as the businesses that help potentially bring those things to a much broader global audience.
And Nick, just to stay with the blockchain wallet a little bit, so it's a free product, right?
Yep.
How do you guys make money then?
Yeah, so great question. So blockchain.com is the world's largest digital assets wallet. And so anyone in the world can sign up. We serve users in over 140 countries. And we just passed the 25 million mark. And it's pretty exciting because the first time I ever came to MoneyConf 4 years ago, there was one small panel about this stuff and no one was really talking about it. And it's really exciting to come back here and see how the discourse has changed. Now, we get users that come to us that have all kinds of different use cases and needs, but anyone can come sign up and start to buy or sell digital currencies like Bitcoin, Ethereum, and Bitcoin Cash. And when they do that, we make some revenues off the exchange, and that helps drive our income.
You partner with exchanges, right? You don't run an exchange yourself.
We do not run an exchange today. We're a totally non-custodial model, which allows us to serve a very global audience. Basically builds a bank vault on your phone.
But I remember, like, very early on, you were funded by ads, right?
So we had some ad sales on the website. We were doing over 100 million page views a month. We continue to do some revenues there. It's just low-hanging fruit. But that's not the long-term business model. It's just foolish to leave money on the table.
Sure. I want to ask you guys a kind of quick parlor game question, which is, so, Facebook is kind of now seen as, this centralized giant. And yet they have spun off this blockchain team under David Marcus, who used to run the Messenger product. So quick question to the panel. What do you think a Facebook product using a blockchain or a cryptocurrency would look like? What would that be? And this is just speculation, to be clear. Maybe we'll start from Nick.
All right.
Yeah.
If I were to try and kill Facebook, what I would do is launch a social network with tokens that will allow all people that participate in the network to earn income from all the ad sales. And so the way that would work is you would have almost all the same features and capabilities that Facebook has, but in return for all my personal identifying information that I share with the platform, as ad sales come through, I actually get some of that income back. So you would have a network effect social network that also shares the income and value that it generates back to its community. And I don't know if that's what David Marcus is doing. I'm guessing probably not, since they wouldn't have told him to annihilate their own business. But there's some clever entrepreneur out there that's going to figure this out. The Facebook audience is aging, which is worse for ad sales in the long term. I think a lot of the PR they've had is particularly negative over the past year and a half or so. And the migration from one social network to the next is relatively easy for young adults. They'll just switch. I've had dozens of friends kill their Facebook accounts this year. We don't use it the way we did 7 or 8 years ago, like when we were in university.
I think it is a potentially mortal threat to them, in addition to some of the other issues that Nick pointed out. I think Brendan Eich and Brave are building on this idea around sort of how do you monetize attention, how do you share that value back with consumers, how do they provide some permission in terms of what data is used and value back for
Brave
that.
is the web browser.
Brave is the web browser.
Ads and
exactly, but
there's
you can
also a token
you
component.
can potentially build that into Facebook. I think my view on that is, I mean, first of all, David Marcus is an incredibly talented guy, and so we have to take it seriously. Telegram raised, as we know, $1.7 billion in a pre-sale. They are building a blockchain-based protocol for messaging. Facebook is a messaging platform. I think that I would argue that's probably a reaction to what Telegram is doing and the potentially disruptive ability for Telegram to build a marketplace that is token-based, blockchain-based, that could significantly surpass Facebook.
Interesting, yeah.
Yeah, I guess it's more about tokenization of the attention, tokenization of maybe the ads and the possibility to distribute the value to the users. It is still very theoretical. because centralization is very strong regarding business model and regarding the fact that Facebook is doing. And there have been some projects to decentralize Facebook, to give some alternative a few years ago with Diaspora, for instance, which was based on peer-to-peer protocols, but it failed because it's extremely difficult to build this kind of model with the network effect. So centralization is still very, very strong. So maybe what they could do is, tokenization of some sort. But anyway, blockchain cannot be used for everything. So I guess Facebook will still continue on this model and maybe use some cryptocurrencies or tokenization. That could be smart, but I'm not sure it will change completely the way they are working.
Yeah, I agree with Nick in terms of what they should do. I don't think they're going to do that in terms of revenue sharing for users' data. So that would be like a great thing to see. I think it's just going to be in the form of maybe loyalty rewards, in the form of a token, maybe with some external retail partners or online partners. I think it's just going to be a very kind of subdued use case, just to show that they're kind of moving ahead or trying to use new technology to add value to their network.
Mm-hmm. Yeah, so it sounds like the consensus is we don't really think Facebook is really going to alter their core business, but they're going to tack this on. I have another question about decentralization. So we talk a lot about, for example, decentralized identity, and we can manage our own identity and private keys and so on. But, I've lost several MetaMask private keys with my CryptoKitties gone forever. I have many lost PGP keys floating around out there. So this stuff is fiddly and difficult. I think, Eric, you might have an interesting perspective on this, which is we have this trade-off, right? So decentralization, you get all the responsibility, great, but that also means you get all the responsibility.
Yeah, so first, sorry for your loss, as we say in the crypto industry. It's true that security and private key management is a huge burden. It's one of the biggest questions that new entrants to the crypto says, how do I secure my cryptocurrencies? And endpoint security will always be a critical issue for individuals, for servers, or for machines. And it's all about education, because Bitcoin, crypto is in the cloud, and people do not understand why they will need some hardware to secure their assets. And so it took a lot of time. When we started with Ledger in 2014, no one wanted to buy the hardware wallet. No one understood why it would be needed, and many people thought it would just fail because it's a hardware solution. But with time, people understood that it was necessary, and also it gave a sense of ownership. There is a psychological point of view of owning a hardware wallet. But it's true that we will need more and more solutions for at all levels to make sure that security at the endpoint level is working, because, as you said, responsibility of the user is huge, and that may be one of the biggest difficulty to have the cryptocurrency mainstream. So maybe in the end, we will not having full decentralization, but maybe some pocket of centralization at some points to secure the private keys for third parties, and we are going to see how it goes. But the Coinbase model, for instance, is very strong, and I guess that we will see a combination of centralization and decentralization regarding key management.
Right, where Coinbase, for example, they hold the users' private keys. Nick, I don't know if you have anything to add.
Yeah, just a quick thought is it's basically a continuum. I mean, you've got people that are very comfortable taking security into their own hands. There are other people that want their security plus a device. And then you've got people that don't want to worry about any of it and have to trust a third party. And it's in that last bucket we've seen some of the biggest issues, because institutions or firms like Mt. Gox have failed colossally to securitize assets. And the whole point of decentralizing in one case was to prevent having to trust anyone in the first place. And so if you are going to surrender custody of your funds to someone or a firm, you need to make sure that they have bulletproof integrity, that their services are audited, probably best if it was open source, that they had a bug bounty program and responsible disclosure and were led by amazing entrepreneurs and well-funded and all the rest of it. And to be candid, in our space in the first few years, there were a lot of very young adults that got into this that didn't have a lot of strong security practices, and unfortunately a lot of consumers were damaged by that.
Yeah, I think we're going to see a continuum of services, and that's a big area of focus for our second fund in looking at user-friendly custody solutions, whether you're looking at the enterprise or for individuals, because I don't think we're going to really see the promise of tokenization until we are able to secure those assets in a better way, in a more user-friendly way.
I don't know if you have anything to add to that, Toby.
Well, I think beyond just the consumer proposition, I think the next wave, at least I see in the whole order of crypto, is going to come driven by institutional activity. And we're just starting to see the beginnings of that with the futures market. And the institutions are not yet getting into the space in a big way, partly because there are not strong custodial services for them to manage their assets and store their assets. And to be honest, there probably aren't particularly robust trading desks, market making offerings. I mean, there are some, but I think the industry is overall in a very much a growing up phase to provide the types of capabilities that will allow large institutions to bring in billions and billions and hundreds of billions of assets into the space, which I think will benefit the whole industry and also improve what's available for consumers at the same time.
Do we think that, as the industry matures, that we're actually back at square one, where we're saying like, well, okay, now you guys hold your own private keys, and then it's like, well, it's very difficult, so we're going to set up an intermediary to take care of that for you, and then eventually we're back at, essentially entrusting private keys to other institutions, to third parties, banks, and so on. Is there a sense that user-friendliness actually leads us in this circular loop, and we're back to intermediaries all over again?
Yeah, well, there is a sense of irony in all that, especially when we are seeing all institution money flowing into cryptocurrencies, like Banker wanted to go into crypto, but the power of decentralization is that anyone can choose, and we will see a mix. People who want to be fully decentralized will be decentralized. People who want to go third party will go through third parties, so it's a free world, and that's the beauty of it.
We have 1 minute, but I wanted to quickly bring this up. We talk about decentralization as though it's theoretical, but there are protocols that we use every day that are already decentralized or distributed, right? So SMTP we use for sending email. Anyone can spin up their own SMTP server in theory, and yet Google, Gmail, and Apple Mail on iOS account for something like 57% of the email client market, right? So I guess my question quickly is, how much decentralization do we think we can bake into a protocol? Because as we see with email, on the client side, you can just end up everyone just using 2 email clients. So I'll start here.
Well, look, I look at the macro view and the way the world has changed. And we, like I started investing in 99, and we were just moving to the internet phase from the PC phase, and starting to open up more data, but data still resided in databases, and we still looked at centralized institutions, and I think that was just kind of the ethos of the 20th century. And as time has gone on, Microsoft just bought GitHub last week or the week before, and that I think would have seemed unreal, just a few years ago, that Microsoft is buying an open source developer community, because they were not the biggest supporters of open source for a long time. So we're just moving towards more of an open source world. This next generation cares about privacy, and so I think you can't ignore all of those macro forces. Even within the financial sector, everything used to reside only within the 4 walls of a company, and then I remember investing in Yodlee in 2000, and they started opening up APIs of customer data between banks, and now that's just standard practice. So that's where we're headed, and that's where I think it's the timing that also matters as well as the technology.
It's the macro trend. We have time for maybe one more from the panel. So if anyone really wants to.
When I made my first investment in 1996, and people were saying, should I build something on top of TCP/IP? Is it going to be around in a few years? Is it going to matter? I think in 5 years, 10 years from now, no one's going to talk about decentralization. No one will talk about blockchain. It'll just be an invisible layer that we'll build on it. And it's not for everything. Decentralization isn't a solution to every single use case, but it's going to be a core component of many applications going forward. And it's not going to be something that there'll be any debate over. We'll just accept it as that's what's the best approach.
Well, we are out of time. Thank you to my panel, and thank you for listening.